Thank you very much, Steve. And we start here this evening. Well, we know that the JSE has granted Barloworld and Zeda approval for the listing of its mobility business. The company that will be listing on the JSE, the Zeda Group, is the largest and only integrated mobility provider in sub-Saharan Africa, and that offers both short-term car rental and long-term fleet management in more than 11 countries on the continent. Zeda Group, which actually operates Budget and Avis, today delivered its financial results for the year ahead of its debut on the JSE. Group revenue was up 6.6% to 8.1 billion rand, while operating profit increased by 52% to 1.2 billion rand. Joining us is Ramasela Ganda, the CEO-designate of the Zeda Group. Ramasela, thank you very much for joining us this evening. Today, the company releasing its pre-listing statement. It's now valued, the market says you are valued at just 4.5 billion rands. What exactly were you hoping to convey to investors out there about this new listing on the JSE?
Well, and I think we had a card. Can you just repeat what were we hoping to convey when? And then the line went down.
My apologies for that, Ramasela. I was asking what you were hoping to convey to investors out there when it comes to the pre-listing statement which you issued today ahead of that listing on the JSE.
Thank you very much for that question and for inviting us. I think the key message that we really want to convey to the market is, as part of the Barloworld, there's a lot of value that was within Barloworld for Zeda, and we were unable to unlock it. And now we are in a good position to do that. Zeda is really as you've seen today, a sector-leading business when it comes to return on equity. So the return that we will be giving to the market is superior, and the capital allocation that we will be doing as a standalone independent listed company will really drive this level of return. So really the message to the market is this is a very important asset that has got real growth behind it. And over the years, Zeda is 55 years. Over the years, in different economic cycles, it has been able to deal with it. When even we look at the COVID period, we have an asset that is highly liquid. So when there is a need for us to diversify, we did that. So really it's a good asset to invest in, and backed by a very strong leadership that has really managed in a period of 2 years. The numbers that you've just said, in the period of 2 years, coming out of losses of COVID, to deliver a 2.8 billion EBITDA didn't just come by chance. It came because there's clear strategy, there's clear leadership that understands and all for execution. And that's what we've done for the past 2 years. We've executed and we've prepared ourselves also for pre-listing so they can count on a well-run business, good governance, but with high shareholders' return.
Without a doubt, Ramasela, these results were delivered in the face of a challenging macroeconomic environment with a number of challenges. You've mentioned COVID-19 in terms of this group's maiden set of results. You've mentioned COVID-19. You've mentioned the Ukraine-Russia war, slow economic recovery, inflationary pressures, global supply chain constraints that have impacted on the ability to procure new vehicles. What were the most difficult parts in the past 2 years? Because we know about COVID-19 and the lockdowns and the fact that when it comes to those lockdown restrictions, you could not even have an operation with through Avis and Budget, as we saw a halt. There was no rental income when it comes to vehicles. Hi, Ramasela. I wonder if you can hear me. We seem to be breaking. I was actually asking how you would characterize the past 2 years, particularly with COVID-19 and the macroeconomic challenges that are still here in terms of inflation, rising interest rates, the Ukraine-Russia war. What have been the most challenging parts for the past 2 years for this mobility business?
Well, and I think the biggest challenge was the uncertainty, because we could not plan anything even during when things started to open up. And some of the challenges that we've encountered when our country was rate listed, and, you know, even if you do a little bit of planning today and South Africa has been opening up, then the world will then close down on us. So that has been really challenging if I don't count the hard lockdown. I think the hard lockdown did really impact us, where we really had to restructure and create a fit-for-purpose business. But I mean, those were also opportunities for us to deal with some of the costs that we've been sitting with regard to an extensive footprint. So we really looked at it as saying, we can never let a good crisis go to waste. And that has been, how do we make sure that we turn our, fortune around and make sure that we put our head down and we deliver. So with all the challenges, like we still have, as you've mentioned it, the issue of supply chain and all the other challenges that we're confronted with. For us, every time we say, there must be an opportunity in this time. And as I said that we have, we're looking at it like now we're saying, usership economy, which is what we've done to say we need the market to really understand the total cost of ownership. I think most people now will be saying, is it the right time with so many challenges? But I say, if it's not now, then when? Because now you are locking yourself in ownership of a vehicle that the interest rate is going up and you may not be able to afford it. But when you have usership, it means you are more flexible. So we see opportunities as challenges come around, and we know that there's a lot of tailwinds, because that's what we see, tailwinds that will be coming, with this long COVID that we are in now. So really the challenges were huge, but the opportunities were greater.
Let's look ahead to 2023. There's a lot of negativity and negative sentiment really in the market, with many expecting that there could be a global economic slowdown and possibly a global recession. Looking at your sector, it also relies heavily on the recovery in the tourism space. How do you foresee 2023 performing, not just for the company, but the South African economy in particular?
So when you look at our business, I mean, we've got 55% of our business which is, contracted and is locally based. And we're talking about the replacement market where people hire courtesy cars. We're talking about the subscription model, and what the subscription model does do. It actually addresses the issue that you're talking about, the slowdown in economy. Why go and take your last money and buy a car if you can actually use it in the form of rental or leasing? So those are the opportunities that I'm saying that are coming, and looking forward, we expect that we will see more and more like we've seen during hard lockdown. And most people don't even know that during COVID, when people were being retrenched in May, for example, of 2020, we had additional 3,000 new users of the subscription model that we never had, and everybody else was seeing all rate. So there will be slowdown as everybody is projecting it, but equally it provides an opportunity of not tying yourself to a capital expenditure, but be able to be more flexible in different markets. So that's something that as we look at the future, we're saying, how do we make sure that in the crisis we're able to provide opportunity? When you look at how our business performed even during the financial crisis, because most people look at it and saying you have discretionary disposable income, you're a leisure business, but a bulk of our business at the moment, the results that we are delivering, you only have 40% of international travel in those numbers, and compare 40% of the pre-COVID level. In the number, it only contributed 13% of our numbers. And you look at domestic travel, also didn't contribute significantly into our numbers. Our stable annuity business in the leasing and in the contract of short-term rental really gave us this number. So all that we're saying is that when discretionary comes, high-yield business, then you can expect to have more returns. So we actually saying we've got a stable base that will carry us even with the fluctuation in the economy.
Ramasela, thank you very much for your time this evening. Ramasela Ganda is the CEO-designate of the Zeda Group, the operators of the leasing business and rental businesses, Avis and Budget, having released their financial results today and a pre-listing statement as they are expected, highly anticipated to actually list on the JSE soon.